Welcome to the Market Guys Live. I'm AJ Monty, Chief Market Strategist for the Market Guys, and this is the time that I've been waiting for all month, which is our rapid fire stock analysis in our open house Q&A session. Now, this is your opportunity to ask me questions directly through the internet in our chat box and also submit questions regarding your stocks. So be ready to type in your symbols, and we're going to go one step at a time, and I'll get through as many stocks as I can in this 1 hour period. Now, before we do that, I'd like to take a look at the overall markets and give you my spin on what we're seeing and how the buyers and sellers are stacking up on the technical charts. If you're new to the Market Guys format, you will soon see that we have candle charts in front of us, and that's how we look at the technical charts to be able to analyze the support resistance levels. Now, if you take a look right now, you'll see the diamonds. This is the Dow Jones Industrial Average ETF, ticker symbol DIA, and you can see obviously that we have an upward trend over the past 6 months that still looks as though it's intact. And if I zoom in here, I'll show you a couple of things. Number one, last week we broke out over this resistance area right here. Now, this resistance breakout is very important for you to know about because that's when the buyers muster up enough excitement to be able to push the sellers back. Now, many times, about 80% of the time, the stock will continue to rally and then it'll start to fade and come back down to this support level. Take a look at that chart. You'll see former resistance right here, right around the 130.13 level, broken here, turns very soon into support here. Now, that's the technical analysis on the price, but there's more to this story. If you take a look at the price as it's going up, you'll notice at the bottom of the chart here, you'll see that the volume is slowly dropping. Now, what does that mean? If you've studied charts, you'll know that that's a price volume divergence. That's taken as a negative sign, meaning that when the buyers start to slow down, even though the price is going up, the sellers are ready to pounce on that stock. So beware that we could very well pull back to the support level right around the 130 area. So that's the diamonds. Taking a look at the spiders, which is SPY, this is the S&P 500 ETF, same scenario. We have a nice upward sloping trend, as you can see here, and we have a breakout of the most recent resistance area that was also resistance back in April of 2011. So we have resistance here also in March of this year and a breakout. Now let me zoom in here for you once again so you could see the details behind the price action. Here is the point where the breakout occurred. Now, what is that? Well, it's a very long green and powerful candle, but you'll notice that on that particular day, we had a gap on the chart. Now, what is a gap? Again, for those of you who are new to technical analysis, I'm going to give you some lessons here that you can take away and learn from. A gap is when there's a price void in the price action. So what happens is, on this particular day, which was March 12th, the market closed, and then on the very next day, on March 13th, the buyers came in with force and pushed the stock over the previous day's highs, and that forms that price gap right there. Again, we broke out of resistance right there, right around, let me get that price there for you, right around the 137.5 level. We broke out, we gapped, and continued for 5 days after that. Now, there's a couple of things going on in the spiders that you need to know about. We have a high from last week's trading session, or actually this is from today's trading session. I'm looking at the daily chart. We have a high here, and we have a bullish engulfing pattern. Now, this is a pattern right here where you have a green bodied candle engulfing the previous red candle, and that is usually taken as a bullish sign. So we have mixed signals here. We have a bullish sign on the spiders, and we have a drop in volume. Remember what I talked about before. The price volume divergence is something we need to pay attention to. So if you're long any of the S&P 500 stocks, what do? Well, the best thing to do is raise the caution flag, go out there and set your stops in place so that you can protect yourself in the event this bullish engulfing pattern doesn't follow through with an upward price move. let's take a look at a broader based index. This is the Russell 2000. Couple things happening here. We still have a resistance area intact right there above, let's see, that's the 858 area. So we have resistance still in place. It looks as though the most recent price action is moving towards that resistance. And this is, again, your signal to be able to protect yourself. Now, I have a couple more things to talk about, and then we'll get to your stocks and to your questions. First, we have to look at is the Qs. The QQQ, these are the power shares. This represents the majority of the NASDAQ stocks. So if you're a technical trader with regard to the types of stocks you trade in the technical sector, then this is something you want to pay close attention to. The NASDAQ through the Qs is still in an upward sloping trend. Let me zoom in here for you so you can see again what's going on. This is a nice, steady and upward trend, nice 45-degree angle, which, by the way, is sustainable. When you are looking at a chart and you see a nice 45-degree angle, what that tells you is that the trend is intact, but it's not an overreaction to the buyers coming in. It's steady price action, which tells us this trend may still very well stay in place. So does that mean you shouldn't protect yourself anymore? Absolutely not. When you are in a stock on a long position, you should look at the risk management principles all of the time and make sure you're protecting yourself, because in a moment's notice, and I'll show you later in the program here why it's so important to protect yourself, and a moment's notice, these markets could come moving down in a correction that might very well surprise you. So that's the Qs. Trend is still in place. Look at the volume. The volume is still increasing on the way up. Not quite a bullish engulfing pattern. I'll zoom in there for you. Not quite a bullish engulfing pattern, but very close to one on stronger volume. Now, before I move on to your stocks, I want you to take a look at the VIX. This is ticker symbol VIX. It's the Volatility Index. And there's a lot of folks that follow the Volatility Index, and for good reason. The Volatility Index is really your opportunity to look at, I don't want to say crystal ball, but there's a very good chance that the Volatility Index these days is going to be your best leading indicator. If you're looking at the VIX, understand that the Volatility Index is inversely related to the S&P 500. What does that mean? Well, when the volatility on the VIX is going down, the price action is going down, then that means the market, the general market meaning the S&P, is most likely trending up. So if the VIX starts to move up, then that's your signal that the general market through the S&P could start to drop. Now take a look at the VIX right here. You see that this is a very well-established support level. Let me back out and look at the weekly chart so you can see this in a longer-term view. Look at that. The VIX has historically bounced off of that $15 level. Now, here's what really caught my eye, and I've been writing about this through our Trade Alert Service reports quite often. Look at this. This is April of 2010. April, the VIX rallied with force. This is not a casual rally. When the VIX Volatility Index starts to show emotion like this, the Volatility Index will spike up and the general market will drop. In April of 2010, the S&P really went through a severe correction, and now, if you think that's impressive, look once again, April 2011. This is the beginning stages of what was a bounce in the VIX, and when the VIX bounces like that, what happens is a lot of the traders start to move to the sidelines and they take their money out of the market and even short the market. I'm not going to get into the short selling strategy right now, but they short the market, which means it gives them an opportunity to make money on the way down. Again, looking at that, that's April of 2011. So here we are, April 2012, and we have the VIX on a support level with some signs of a possible pivot point forming. Now, keep in mind the pivot point, which is nothing more than a V pattern here, the pivot point needs to form fully before we can say with certainty that the VIX is starting to rally. Right now, it's just on support. And with that, it could still go lower, but my guess now is that the pattern will continue that it has in the past 2 years, that April could very well be the month for you to watch your position and maybe move to the sidelines on some of your positions, but definitely protect those other positions. Now, let's go to some of your questions. Let's take a look. We have, who wants to be the first one to give me a stock symbol? The first one that comes up is David Smith. David, I don't know where you're calling in from. I don't see the state, but you tell me that you're long XOM, which is Exxon Mobile, at 87. Let's take a look. Exxon Mobile, type that in, XOM, hit enter, and there we go. Now this is a 3-year weekly chart. Now I like to start off with the weekly chart because it gives us more history to look at, and when we have more history to look at, we can identify support and resistance at those levels, which helps us get a better idea on where to put our stops. Now looking at Exxon Mobil, what do we see? Right there is a major resistance level that is still intact right above 87. That's 88.21 to be exact, and that's on the weekly chart. As I zoom in, take a look here, you'll see that that resistance level is still very much intact, and what's happening is the volume is increasing still as we hit that resistance area or approach that resistance area, but this is still earlier in the week. Now look at that little volume bar down there. You have to understand that this is the beginning of the week, so the volume has not yet accumulated, so it's hard to say whether or not this week is going to end with stronger volume. But I will tell you this, if the volume is lower than it was last week, then make sure you are absolutely protecting this. David, if you're long it at 87, you're right at your break-even point right now. If you do not get a breakout over 87, then my suggestion would be, if the stock starts pulling back from resistance, I would get out of that position and then wait for it to break over 88, which is your sign that the buyers are mustering up enough energy to get through the seller's resistance. And when you see that breakout, this could very well wind up giving you a profit. So it's still too early to tell. But David, let me show you this. With every announcement that I make on a stock with regard to what I think the forecast of that price action is going to be, I also combine that with the place where I think you should put your stops. Now this area right here is the high. This is the week of October 11th. Now I'm drawing my line right from that high. Why is that? Because that's a former resistance area. And if you go to the Market Guy's website and click on the video link, you'll see a video. It's a short video. It's about 5 minutes long. It's a video that shows you how to look at the role reversal, which is the concept that we use to identify support and resistance, but also we use that as a gauge to manage our risk. So right there you can see that there's resistance, former resistance right there at 82.15, and on the week of December 11th of 2001, we broke out of that high. So now remember what I said before, former resistance once broken turns to support. You can see here how the stock managed to hold support in this level. So if you want to protect this position, you're long it at 87, then I would put a stop somewhere below 82. A break below 82 is a failure in the price action for the stock, and you definitely don't want to be hanging on if it breaks below 82, because guess what? All of the other sellers are going to start accumulating when that stock starts breaking down below 82. So David, hopefully that's helped you a bit. Let's see, who's the next person who wants to submit a question or a stock? Let's see. Peter. Peter's ticker symbol is FIO. Let's take a look at this for Peter. Peter got in there early. I think he was the first one in his seat before the program started. I saw him actually sign on and he put his stock symbol in there, and thank you, Peter, for repeating that. This again is a weekly chart. Now this is 3 years of history, but Peter, you can see there's not a whole lot of price action going on because there's not a lot of price history. What we do see is an area of support, a general area of support right below 20, and we have resistance up there at around 35 to 36. Now that's the weekly chart. I'm going to switch right there. I'm going to switch to my daily chart so you can see how these lines must stack up against the daily price action. As I zoom in here, let me tell you, Peter, there's a couple things going on. If you could, while I'm analyzing the stock, Peter, tell me what your position is, if you have one at all, or what you think your position is going to be. If you have an idea about this stock, let me know about that so I can help you along. While I'm waiting for your answer, let me show you the role reversal line right there. Here's former resistance, which occurred on February 12th of this year. We broke out over resistance on March 2nd, again, of this year. And lo and behold, what happens? On March 6th, we hit support at the 29.61 level, and that's exactly where we closed today, right there. You're right at that support level, Peter. So my suggestion is if you own this one, put a stop somewhere below 28, which is right below this line, and protect yourself. There is a chance that this stock could bounce. So here's where I would tell you as far as your price target. I'm still waiting to see what your position is. Okay, Peter, you are long. Do you have a price at what you're long? Let's see. Don't see, just see you're long. Okay, it doesn't matter what the price is. You are long this stock. So let me give you a good price target so that you can set a level, a limit sell order so you can get out and take a profit. This resistance area right there, right around 37, is a good place to sell that position. Now, if you get up to 37, you're up over 20% at that particular point. Now, remember something. If you are long a stock and you're up 20% and you're trying to squeeze out another penny, I would caution you at that point because there's an old saying, bulls and bears make money, pigs, well, I'll clean it up. They don't make money. There's another saying, but I'm going to keep it clean for the viewers right here. This is a point right here where you could take advantage of a pivot point. So if you get a green candle, Peter, you might want to add to that position if you start to see that pivot point go higher. So for those of you who are not in this position and you're thinking about getting in this one and joining Peter, keep in mind that before you buy anything, you have to know when to get out of that position before you even pull the trigger to get in. Okay, I'm going to try to keep this going as quickly as I can. There's a question here, let's see, from Rick. How do you feel about the metals, GLD and SLV in particular? Okay, Rick, let's take a look at this. Just before we get started, I want to let you know I do have a position in both of these. I am long. I'm long GLD, I'm long SLV, I'm also long ABX. I've made these recommendations to our viewer base or our subscriber base, to our alert service, so they're long too. And let me show you what we have right here. I'll zoom in and I'm going to take out some of these lines so you can get a better view. I'm going to back up first, and I want you to look not at a weekly chart, I want you to look at a monthly chart going back 10 years. Now, in my neck of the woods, this is called an uptrend. And as you can see, this is a nice steady uptrend with a nice 45-degree angle going right there. And again, remember what I said about that 45-degree angle. That's nice steady growth. Vertical growth, vertical price action is not as reliable because if you see a stock going straight up, understand that that's not sustainable growth and you have to be really careful about that. But for GLD, this looks real strong right now. And you want to make sure that even though this is an upward sloping trend, you want to make sure that you are protecting yourself. So now that we saw the monthly chart, let's take a look at the daily chart. And I'll zoom in here for you so you can see how I'm drawing these levels of support. Now right here is an area of support where we saw a bounce. That's right around the 158 level, and we're starting to see some green candles. My short-term forecast for GLD is right there. Now remember, we're recording this. I'm correct the majority of the time, but I'm also wrong some of the time as well. What does that mean for you? Well, if you get into this stock, make sure that you put your stop somewhere below the 158 level. Remember, if support breaks, that excites the sellers, and the sellers starting to come into the market will actually force the market lower, and that could hurt you. So you need to put a protective stop in place. Let's take a quick break and let me talk about stop loss orders for you. If you've never used a stop loss order, I'm telling you, you're missing out on one of the most important ideas behind risk management. And the market guys are very, very particular about how we manage risk. If you know exactly what you're going to lose ahead of time before you get into that stock, then you're minimizing your potential to make a profit. How does that make sense? Well, let me tell you. There's an old saying that if you want to make a lot of money in the market, don't lose a lot of money in the market. So in our goal here in the risk management disciplines is we want to make sure that we're minimizing the losses when we are wrong and we're maximizing our gains when we're right. So what we do is we follow the 1% rule. Again, the 1% rule is nothing more than limiting the loss to your account to 1%. If you go to the Market Guys website, there's another video on the free educational video site that talks about the 1% rule specifically. It's about a 5-minute video. You might want to review that so that you can get a good understanding on how to minimize your loss. Now, for the real risk takers out there, I'll tell you that you might want to risk more than 1%. Not something that I would recommend, but if that's the case, then make sure you're limiting your losses to 2% of your total account value. Now, there's a simple formula that we use, and the risk amount that I'm talking about here in the 1% rule is the maximum percentage of loss for your total account. So let's use an example here of $100,000. I'm just taking that out as a round number to help you with that. If I have a $100,000 account that I'm trading with, I want to lose no more than 1% of that, or $1,000. So the $1,000 represents the risk amount. Now, how do I turn that into the number of shares? Well, if I have $1,000 in my risk amount and I know that I'm risking, let's say, $2 per share, let's say my stop loss is $2, then what I do is I take my risk per share, divide that into my risk amount, and from there I will be able to calculate how many shares I get to own. Think about that. If I'm risking $2 per share and I have to figure out how many shares I need to own before I could lose $1,000 on that, I take the $1,000, divide that by 2. That means I have 500 shares that I can buy before I go over the top. Now, you can fudge these a little bit according to your risk tolerance, but I definitely wouldn't go right out there and start risking 10 or 20% of your account. There's a lot of people actually do that, and they put themselves in harm's way because they love a stock. In fact, there was a gentleman here. Let me see if I could find him. He's already scrolled through. You had a question. Let's see if I could find that question. Okay, here it is. It's Caesar. Caesar, I'm not going to mention your last name so I don't cause you any embarrassment, but let's say this. Caesar's question is, AJ, I really need you to please tell me what you think about VMW. I invested quite heavily on an April call. Thanks for your help. Let's go look at that for Caesar. And Caesar, I'm just going to type in VMW for you. VMW, there we go. And this is the stock. Now, let's take a look at this for a moment. If you are long the stock and you see this angle of price action right there, you can see that this angle of growth is more than 45 degrees. In fact, right here you have a more accelerated trend. Let me show you what I mean here. I'm going to draw some trend lines for you. Here is the overall trend that we were looking at before. So here's your trend line. But notice that the most recent price action, you see a steeper angle in that trend line. What does that mean? It means that the buyers over the short term got more aggressive. But look at the volume. Look what's happening here. The price is going up, but the volume is going down. So what does that mean? Well, it means that the buyers are getting less motivated to buy, and you have to be careful of that. So Caesar, if you bought the April calls, I'm also going to tell you that you made a mistake in the month selection. So if you're in any kind of a profitable mode right now, I would seriously consider taking some of those profits, waiting for the next pivot point in the stock to move higher, and I would buy a longer term call that will allow you to stick with this stock for a longer period of time. You see, option traders, especially the ones that are new to the option markets, their biggest mistake is when they buy the front month option chain. Now, in the world of options, there is a thing that we learn very quickly, and that you get what you pay for. In other words, if you buy an option and it's cheap, chances are you're going to get cheap performance. Buying the April options, you're limited to the amount of time that you can hold this option contract. Now, for those of you who don't trade options, don't worry. This is something that you need to know eventually, because you need to see how option traders are moving the markets. Even if you're a long-term investor, it would pay for you to be able to go out there and look for the option strategies so you can see how they're moving the market. So now that you see that accelerated trend, let me back up for you so you can see what you're up against here in the form of resistance. Going back to this point right here, which is right around July 11th of 2011, you can see that that high right there represents a resistance point. If I go back on the weekly chart, let's take a look at that. I'll back up even further. You can see, actually I'll go to the monthly chart. Let's see what we have there. This is the monthly chart coming up for you, and you'll see that the monthly chart, although there's some resistance back here from back in 2007, this is the most predominant resistance level that we have on the charts, right around 111. So your long calls, that means that you are going to make money if the stock goes up, but you're quickly moving to a place where the stock is bumping its head off of the ceiling. You see that it's pulled back a little bit. So Caesar, if you're heavily invested, it's not what we teach people in options. Options is not for the faint of heart, and if you are looking to trade options, you need to be very conservative in your approach, because they can sting you if you're not careful. Options are very much like a credit card. They can work really well for you when you use them correctly, but what happens when you take a credit card and use it the wrong way? It can be devastating, and we don't want that to happen to you, especially in the equity markets. So let's go back to our stocks, and let's see who else is giving me a stock symbol. U.S. Steel, given to me by William Ehrlich, and William says, it took off today. Should I be taking profits, or does it have further to go? Well, let's take a look at good old X, U.S. Steel, on the charts. Let's remove some of these because I had some old lines up there, and I'll start new for you. And what we're looking at here is a slight upward sloping trend, also known as a trading channel. Let me identify this for you. If you're not familiar with trading channels, let me give you some instructions on how to draw that. It starts off with you're picking some lows. Just have your eye go along the bottom of the chart, and you'll see these little dips or pivot points. Here's one back here on October 4th of 2011. Then there's another one here right around October 25th of the same year, and you can see how it starts to move out with these pivot points. What I try to do is I take as many of these as I can, or get as close as I can to connecting the dots there, and there's my trend line. Now, a channel is when you have a parallel line that acts as resistance to the original trend line that we just draw. So in order to draw the proper channel, all you have to do is take a line, connect the tops, and try to keep them as close as you can to being parallel to the bottom line, drop it, and there's your trading channel. So right here, William, let me tell you what you have. You have a good rally. As I zoom in, you can see that the stock has rallied quite nicely on good, strong volume. What that says is that the buyers are still very much intact. Now, if you own this one, I will tell you, don't take your profits just yet, but put a trailing stop in place, which is going to allow you to move your stop up with the price of the stock. So think of it as a ratchet, or let's say you're climbing the face of a mountain, and each time you take a step higher, what are you going to do? You're going to take your piton, take your hammer out, and you're going to hammer in another piton a little bit higher than where you once were. So now you take your rope and you click it into the piton as you move higher to protect yourself as you go up the face of the mountain. Well, trading or even investing is very similar to that. What you need to do is put your protective stops in place. I would put a stop somewhere below the low here from March 16th, and that would be somewhere around, let's see, that's going to be right around the 29.5 level. Now, if U.S. Steel goes up again tomorrow on strong volume, you take that stop, like the piton, and move it up the side of the mountain so that you can protect yourself along the way. chances are you have profits in it already. Otherwise, you wouldn't be asking me if you want to take profits. Keep the position intact, and as it goes higher, let the stock tell you when to get out of it. When the stock is tired and the sellers start to move in, what's going to happen at that particular point is you will see the sellers automatically start to move the price lower, at which time your stop will be in place and you'll get out when the stop tells you to. So congratulations, William, on that pick on U.S. Steel. One final note for you. If you take a look, you'll see that the volume is still increasing in the direction of that trend. So that's very good that you have that position in place, and I'm happy for you. But again, be mindful that you protect your position. Okay, let's see. Jan Silverman says, Netflix, NFLX, I'm long the January 115 puts and short the April 95 puts. Well, Jan, that's a more advanced option question. And being that this show is today being recorded for mostly the investors and even the beginners, I will tell you that this, in a quick note, if I take a look at Netflix right here, you'll notice that in the past they had some problems with their membership because of the change in their prices, but they're trying very hard to make it up to them. Let me clear my screen once again because this is a popular stock that a lot of people ask me about. Netflix right now, this is a one-year chart. Let me just first, before I answer your question about the options, let me show you the technicals and what's happening in this stock. You can see the dramatic drop that they had back in September, October, and November of 2011. And they started their recovery actually at the very beginning of this year into January and February. You can see that the stock starts to move up. Now, as you zoom in here, you'll see that there's a gap right here that came very close to filling. In fact, what happened here is a role reversal line, as I draw for you right there. There's the role reversal. Resistance here turns to support here. Now, fortunately for you, Jan, this stock looks like it's kind of hovering around the 114 level, but you need it to go a little bit lower. In this particular spread, you're long the January 115 puts and you're short the 95 puts. So what I would do is Netflix looks pretty bullish right now. I would close out of that position and readjust the position or realign yourself to something that's going to help you make money as the stock starts to move up. Netflix is a very volatile stock, and you have to be really careful, especially when it starts breaking down below key levels of support. So, Jan, that's for you. I would get out of that position because it looks like it's going to lose money on the way up, and I would reposition yourself in something that's a little bit more bullish, and then look at this. Right at the top there, there's my next resistance area, right around the 131 to 132 area. That would be a short-term target for me in Netflix. Keep your eyes on that one. This is being recorded so you can verify that and check back on the charts because you will have the luxury of time on your side as you look at the recording. Okay, I'm going to keep this going. We're going, boy, talk about rapid fire stock analysis. You're keeping me pretty busy. We have a lot of people. This is a record attendance, by the way, on the website. And for those of you watching the video, I want you to know that the next time we do this, you too will have an opportunity to submit stocks to the market guys so that we can analyze those stocks and really help you with your questions as well. All you have to do is go to the market guys website, click on the front page, and you'll see right at the top the date set for the next web seminar or open house Q&A. All you have to do is register. It's absolutely free. We love that part because we're attracting a lot of people. And our goal through that website and through these web seminars is to be able to help you understand, number one, how to manage risk. Remember something, you're going to be wrong every now and then. You can't be right every single time. The sad thing is that a lot of people think that they're going to beat the market every single time. Now, I've been doing this for over 30 years, analyzing stocks, analyzing trends, and I will tell you one thing, that most people just don't know how to manage risk. So the market guys are embracing a platform of solid risk management strategy so that even the investor or trader can learn ideas that will help them protect themselves so that they don't suffer from a catastrophic loss. Remember what we said about the VIX. April is showing a trend for the VIX to go higher. If the VIX starts to go higher in the month of April, which is next month, and you're not protecting yourself against a downside move in the market, then you're really taking full responsibility for your losses. We can only do so much to help you protect yourself, but ultimately you're the one that has to pull the trigger to make that happen. Well, thank you very much, Jan, for that, and let's move on. If you didn't hear from me yet, keep typing in your stock symbol, because we have Henry right now is the latest in RIG. Let's see, does Henry have a question with that? No, he just put the stock symbol. That's okay. Let's look at RIG. Henry, while I'm looking at RIG, put in something that'll let me know whether or not you're long this one, or you're short it, or you're thinking about buying it. Give me a clue so I can help you out. Right now, it looks to me that RIG is getting ready to hit some resistance. Let me show you what I'm talking about. I'm going to draw my horizontal line right here, which is the price level, right at this double top back here. You see this? This is 1, 2, and now this is the third time right here that we are testing resistance on RIG. Now, I'm bullish on the energy sector right now, but that's long-term bullish. Short-term, RIG is showing us some signs of stress. Here's why. As I zoom in, you'll see that there is a touch of the resistance level right there at 59.29, and you look at today's volume, what is that telling you? Now, I'm going to let you make that call. If the volume is lower when the price has gone up, what does that tell you about the buyer's motivation? Well, if the volume is down, it tells us that the buyers are less motivated than they were yesterday. So right there, Henry, if you are long the stock, then you need to be protecting yourself right away, because if you're not protecting yourself, then you're going to be subjecting yourself to a loss. Now, Henry says he's interested in whether to short RIG given at previous resistance level and a gap riding the upper Bollinger Band. Now, I'm not going to get into the Bollinger Bands right now, Henry, because I don't want to confuse everybody and overwhelm them with all this great information. We'll take some of this and maybe save it for the next show. But you are absolutely right. I like your idea of shorting the stock because it is showing some signs of a pullback here, and we see also signs of it touching resistance on lower volume. Now let's hit the pause button for a second and let's talk about shorting the market. What does that mean? A lot of people are talking more about it, but still have never shorted the market. And this is not something that investors tend to go along with, because investors' idea is to take a stock, give their money to that company in order for that company to grow, and hopefully that company will reward you with dividends or a higher share price. Now, as we all know, that doesn't always happen. Investing is not like it used to be. In the old days, investing was to buy and hold, and you could hold that for 10, 20 years and feel good about your investments. But because of the volatility in the market, I'm going to tell you that it's a lot harder for you to buy and hold. So what the market guys have done is we have embraced a new strategy for today's investment ideas. That is a buy and protect strategy. If you buy a stock, learn how to protect it. And if you can protect your stock, then you will be able to minimize your losses in the event that you are starting to see a pullback in the market. So a stop loss order will protect you on a short strategy as well. But here's how it works. Let's imagine that here's my mouse. Okay, let's say we're in the market of trading the Apple new wireless mouse, and I think that the price of these particular mice will start to drop, and I don't have any of these in my position. So what do? I take this and I say, okay, Mr. Broker, I would like to borrow this from you, because they keep an inventory of things that they hold, particularly stocks, and I'm going to borrow that from my broker, and then I'm going to take that borrowed stock and I'm going to sell it in the open market. So let's say I borrowed this mouse from my broker and I go out there and I sell it in the market for $20. Now what do? I take that and I cash in the $20. So I sold the mouse, I have the $20 in my account. Now the price of the mouse is dropping in the open market. What does that mean? Well, now I could buy it for cheaper than $20. Let's say I buy it for $15. If I sold it at 20 and I'm buying it back for 15, then what that means is I am going to be able to keep a $5 profit. Now, once I bought that mouse back for $15, I'm going to give that mouse back to my broker, hand that back to them, and I keep the profit. That's shorting the market. If you've never done that before, then I would encourage you to do it on paper first until you're comfortable with it, and then from there you can go and practice until you're comfortable and then put your money in the market. When you finally do that, then do it a little at a time. Just kind of creep into the market. Don't just storm into the market. Okay, let's see who's out there. I don't even know. I'm starting to get out of breath keeping me so busy with these stock symbols. PB and J. That's PB and J is submitting FRO. Let's take a look at FRO, and this is Frontline Ltd. Now, PB, I don't know if that's just your initials or if people call you PB, but I'll tell you right now, this is one you need to keep your eye on, because if you own this one right now, look at that. It's been in a downward trend. We had a big spike, and it went all the way up to $9.50. What's that high up there? Let's see, $9.47. And this, my friends, is called a shadow. Let me zoom in for you so I could give you another lesson on what this looks like. This is the body of the candle. That's that green rectangle that we see there. Now what that means is, on the opening of today's trading session, the stock opened at $7.64. During the course of the day, what happened is the stock traded up to the high of, what's that, $9.47, and then closed at the top of the rectangle, which is $8.28. So what does that mean? Well, today was a volatile day for this particular stock. One of the things that's really dangerous about stocks that are priced less than $10 is that a lot of times the institutions do not participate in those stocks, and you don't get the support, and what instead you get is volatility. Volatility is the friend of the trader and not necessarily the friend of the investor. So as a trader, you can capture profits from here, but the investor would be very stressed out on a day like today because they're seeing all this price action. What I would say is to put a stop somewhere below this low. Okay, and I'm going to set that right at 7.5. Why 7.5? Because take a look at the candles. You have 1, 2, 3, 4, 5, 6, 7, 8 candles in a row that are in an upward direction. Yes, the volume is increasing, but here's my forecast. I'm not going to give you a forecast on price. I'm going to give you my forecast on volume. There's a chance that this volume tomorrow is going to drop. There's a good chance because there's something that was thrown in excitement in here. It might have been news. I don't have the news feed on this one particularly right now, but I'm telling you something. Something sparked this stock higher. Chances are it was a news announcement. Now, tomorrow, now that the news is out, tomorrow the volume will most likely drop because the first knee-jerk reaction is from those who made the move on the news. So here's why you got to put your stop below that. If you put a stop below 7.5, then and the stock trades down below that, you've protected yourself. Now, PB, I don't know what your position is on that, but if you want, you could put that in. Okay, you had the notes here say good time to go long. FRO is too late. I would say yes. It's too late to go long it right now, but I would wait for this gap. Take a look. See, there's a gap down here. I would wait for that gap to fill and wait for a pivot point to form at that new support level before getting back in. So sometimes patience will help you in establishing those profits. If you're buying it tomorrow because of the news today, then all of that excitement has already gotten into that stock, and you're getting the tail end of that price action, which is only going to cause some heartache because you got to think about this. As I back up on this chart, take a look at this for a second. This is a great lesson. Imagine all of these people back here, back in April of 2011 and June and on and on and on into September, October. All of those people, all of them, who are still holding the stock right now are losing money. You know, they bought it at 20, they bought it down to 15, they bought it at 12, they bought it at 10, and it went all the way down to 2.5. Now look at the psychology behind this. If you bought a stock at 20 and it's down in the dirt at 2.5, how are you feeling inside? Chances are you're not feeling too good. So what happens is all of those people who had suffered that loss all this time are now seeing the stock go to $10. What's going through their minds? Think about it. What would be going through your mind if you owned it and it went down to 2 and now it's up at 10? You're thinking, you know what, maybe now's the time for me to get out of this and take my shot and move on, because I may not get another chance at this stock going to $10. So what happens is the people who have bought the stock long ago are now becoming the stock's worst enemy at this particular point. So they're already putting pressure on this level, and you can see that in the past year, today's volume is the highest volume that we've had in that year. So there's a battle going on right now, and you need to be aware of that. So PB, I would hold off, wait for that stock to bounce, fill the gap, pivot, then you could buy it, and then set your stop right below there. Now, I have to commend Ed Bradley here. You can't see my screen, but let me tell you, at the beginning of the program, I said if I'm not answering you, just put it in a couple of times and I'll get to it because it keeps repeating. Well, Ed, I think you have the record for the most submissions on one stock. Right now, you said that you're long HAIN at 35. So I'm going to help you out right there. And I think I just conditioned everyone else on the program to type in their stock symbols multiple times. But let's look at HAIN for you and take a look at that. Now here is a trend that's nice and steady, again on the upward path. You're long in at 35. It's now trading almost 44. Now, Ed, I'm going to tell you something. Don't get out of this one right now. Here's why. Let me take a back stab here and go look at the weekly chart going back 3 years. Let's see what we get. This is a stock that has been in an upward trend for 3 years. Now you've got me curious to see how far this trend has really been intact. I'm going to go back 10 years and look at a weekly chart to see what we're looking at. This is 10 years of price history, and this is a 10-year high right now. Okay, now that we got the 10-year high, let's go back to the daily chart so I could help you out. Remember the role reversal line that we talked about. This is something that I will talk about on every single web seminar, every seminar that I do, every television program, every radio station I do. I'm going to be talking about the role reversal. So let's identify this for you so you can see exactly what the role reversal is. The role reversal, remember, is a former resistance area that I'm taking. All you have to do is look back at the chart, find an area of resistance that's very noticeable and where it was broken, and you'll see that the $38.60 level is exactly where we are. So here's resistance. It was set back in October 30th of 2011 at $38.60. It tested that resistance in December of last year, and lo and behold, there we go. February 3rd of this year, it broke out, and not only broke out, it stormed out over that resistance point. Now that you got the story right there, let's go in and zoom in to see exactly what's going on with the buyers. Now, let's take everything that we've learned today and put it all together so that we can help Ed with this analysis. Now, Ed, is there a guarantee that tomorrow it's going to go up and keep going up? Absolutely not. In fact, there are no guarantees. Well, maybe one. There's one guarantee that I'll make you. If you don't protect yourself and you allow the market to take money from you, it will absolutely take money from you. So that's why you have to protect yourself, even in a stock that looks as good as this. So we have a role reversal line here, but look at this. We have a secondary role reversal right here. See, back on the 6th of February, it hit the high, it came back down, tested the high again on March 1st of this year, and then there we go. There's your breakout. On March 13th, it broke out over the high, and the very next day, look at that, it came back and it tested that support level. So now we have a stock that's starting to move up again on a strong green volume candle. Remember what I said about that green volume? price volume divergence is bearish. What does that mean? Well, if I have a price volume, in other words, price is going up and volume is going down, that's negative. But here's why this one's positive. If price is going up and the volume is going up, then that means that the buyers are still intact and they are controlling the price. And I'll tell you right now, sellers don't want to get in front of a raging bull. They would rather run away from that bull and wait till the bull slows down before they start selling into it. So here's what we have. And I hope, Ed, you're really happy about what I'm saying because everything's working in your favor right now. You have the breakout point right around the 42.17 level. But today, this big green candle on green volume is telling us that the buyers are really taking another stab at the upside. Now, it's not a bullish engulfing pattern like we saw back here on the 9th of March. See this green candle here engulfing the previous red candle? That's bullish. Not quite the same, but I really like that green candle for you. It's working very nicely, and we'll be able to take a little ride on this one. So protect yourself. I would put your stop right below the $42 level. So Ed, if you're long at 35 and you get stopped out at 42, you really shouldn't be too upset because this stock most likely will give you another chance to get back into it. Now, a lot of you are watching from the sidelines and you're saying, boy, I wish I had someone to tell me what to do each and every day like you're doing for these folks. Well, you can. It's the charts. I am not the person that has the ability to read a crystal ball, and these certainly are not the crystal ball for me. But what I have developed over the number of years is I've developed the ability to read price action. Now, my goal right now is to teach you how to read those charts in an effective way, not to predict the market, but to protect your profits and most certainly protect yourself against a catastrophic loss. I'm going to say that over and over again because I don't want people to misunderstand me. It's not about just buy, and greed. There's real strategy behind investing and trading. And even my own kids, I teach my kids how to read price action. And I tell them simple things that most people can understand. If you want to make money in any market, doesn't matter if it's a stock market or if it's a real estate market or if it's any other market where you can buy and sell different services or commodities, understand that if you want to make money in that market, all you have to do is put money in the direction of where that money is flowing. And you're putting the odds in your favor. See, if you can continually put the odds in your favor, then you will be better off in the market because you won't be suffering the slings and arrows of some of the analysts out there that tell you actually that they believe that the market is going higher. So we are going to take a couple more stock symbols, and then from there we're going to wrap things up. We'll get really close to the top of the hour. But let's see, Joe has a question, and that is, he's looking to get back into Apple after selling at a previous resistance at 548. Then it broke out, has lots of gaps, and I see role reversals. See support at 578, 569, 552, and have orders in for each. Well, let's take a look at Apple, Joe, and I'm going to help you with this one. First of all, remember what I just said. I looked straight in that camera right there, and I said, if you want to make money in the market, put your money in the direction where the money's going. And here's what's happening. This is Apple. Now I'm going to take a look at this on a monthly chart. And you're going to see something that's quite amazing. This right here is an upward sloping trend of Apple. And I'm going to do this. Remember, this is 10 years of price action. Let me go in and draw my trend lines. Here's trend line number one. This is when it was going slow and steady right there, right up until mid-2008. And then what happened is the trend accelerated. There's the second acceleration of the trend. Now what's happened recently? Right here. This is vertical price action. Now Joe, I understand what you're saying, and today was probably painful for you because Apple was up over $15 on news that they were giving out a generous dividend. And of course, people have that knee-jerk reaction and they go ahead and they start building into that position after the news. But take a look at that price action once again. Let me zoom in here for you so you can really see this with both eyes on that chart. This is a monthly chart. Remember, each one of these green candles is a month. So here's month number one, bullish engulfing pattern. Month number 2, big green candle. Month number 3, another green candle. 4, another green candle. And it looks as though, because we still have a lot of month left in March here, it looks as though that this month might still beat the overall volume of last month's price action. But it's really hard for me to get into Apple at this particular point because, not of the product, but because of the overall trend in the stock. Now, what we do is we have our service that we put out to our members. It's called the Options Oracle, and we have the Equity Oracle service. What is that? It's a trade alert service that allows you to get a trade candidate from me each and every week. When you have an expert showing you this on the chart, not only when to get in because of a role reversal line, but also when to get out when things start to go wrong, you have that trading coach right by your side. Now here's how the oracles work, and if you're interested, just go to the Market Guys website. All you have to do is click on the Market Guys website, and there's a tab right at the top that says Oracles. You click on that tab and you can see the video on how it works. Now each and every week I put out a PDF report that shows you the entry point, the exit point, and all the support and resistance levels you want to know about. But I also accompany that with a video that's about 5 to 7 minutes long. And what does that do? It narrows it in and zooms in on the risk management strategy so that you don't have to guess at that. And when you don't have to guess at when to get out, guess what happens? All the pressure comes off your shoulders and you're able to think more clearly because you have your exit strategy in place. Just like I'm telling Joe right here with Apple, this is a monthly chart. So for 4 consecutive months in a row, Apple has been going up. Let's take a look at this 10-year chart. When was the last time we had that kind of a winning streak? Well, back here we had some green candles. Here we had some green candles. But the volume was accelerating back here. See the volume accelerating? We have to keep an eye on that volume right there, because if the volume starts to drop, Joe, and you get long, that could be very painful, because I'll show you, Apple could absolutely pull back to the $500 level, and that would be considered an honest correction. Yes, an honest correction. A $100 price move lower will still keep Apple in an upward trend. I think Apple could very well be the first trillion-dollar company ever to trade on the stock market. Yes, I believe that. I think it could happen. Look, we're airing this on Apple TV. I think, personally, that they're going to take over the television industry. Between Apple and Google going head-to-head, cable better watch out. They got a real problem right now. That's a great thing to be thinking about when you're investing in a stock, but the story of the stock doesn't complete your strategy. If you believe that that stock has future, and it could be a trillion-dollar company, then what you should be doing is paying attention to the technicals to get the entry point in place. Once you've done that, then you could really move with confidence and still be ahead of the game and putting the odds in your favor. Okay, Joe, hopefully that helped you out. I'm going to take one last stock, and Jan, I'm sorry, but I already got yours out there, and there's hundreds of people still waiting in line here for a stock analysis. Let's see, Mike has a question. He really appreciates the monthly call. Thank you, Mike. I'll send you a check in the mail for that plug. Now, seriously, this is my pleasure. I really enjoy doing this for everybody because I could feel the energy, especially when we go to these live events. We do the money shows and things. You come out off the stage there and you really give me all those questions, and you can see that you're really enthusiastic about what you're doing. And there's a lot more that you can learn. Let's take a look. One more. Jim Palmer. Jim, I'm not going to get into your option strategy, but I will look into HD, which is Home Depot. Take a look at this, HD. Now, this is a monthly chart going back 10 years on HD, and you can see that Home Depot has a tendency to oscillate. But look at this. On the monthly chart, what's happening? We have a breakout occurring. Now, do you remember what happens after a stock breaks out? It generally pulls back. So I'm expecting Home Depot to pull back a little bit to this level before going higher. So right around the 43.36 area is where I'm expecting Home Depot to come. Now, if it gets back down to that support level and bounces, then that's a great place to get long HD, Home Depot, especially as we enter the hurricane season. That's a whole thing called seasonality. When you look at stocks and how they're affected throughout the year by weather patterns and things like hurricane season, you'll know that stocks move with the seasons just like commodities do. And hopefully this has really helped you in our rapid fire stock analysis. This is AJ Monty, Chief Market Strategist from The Market Guys. I really appreciate you joining us. I look forward to our next show. Have a great day. Bye-bye.